Continuing on with our theme of fan favorites, we're going to take a look at Netflix, and in this case, we're going to look at a 60-minute chart and see what we can find. Remember, we're looking for consistencies with the methodology, with the principles that you've learned, and how they can be applied to any stock, any instrument, any commodity, any chart time frame, anything at all. The name doesn't matter. The time frame doesn't matter. The first thing that stands out on this chart to me is right smack in the middle. We have a nice, healthy consolidation pattern. We have a large green up candle, and large is in comparison to the rest of the candles you see on the chart. And then the stock went sideways for a period of time. How long did it go sideways for? Counting the large green up candle, it went sideways for 14 candles before breaking higher. Why is 14 important? One of our favorite numbers is 7. 7 times 2 or multiples of 7 are important. Therefore, 14 is important. I also think it's important to reiterate something about how to take a trade like this if you see a consolidation pattern and you're interested to take the trade. For example, on this stock, it would obviously be on the long side. We're looking to buy Netflix out of this consolidation pattern. Of course, each and every trader has to assess their own risk tolerance and what they're willing to risk on the downside in terms of a stop out. For example, if we're wrong, and since this consolidation pattern, it's pretty obvious where we're wrong. Any close below the low on a 60-minute basis, so any candle that would close below the low of the large green up candle means we're wrong on the trade, and the likely scenario is it's not going higher, but going lower. So the low of that green candle where the black line is your line in the sand. As such, what our objective really is, and in some cases you won't be able to do it, and in some cases you will, but you really want to buy the stock or whatever the vehicle or instrument is as close to the bottom of the large green up candle as you can. Why? Because A, if we're going to be wrong and it's going to close below the low of the green candle, we'll obviously be closer to our entry point, which minimizes the risk. The lower we buy it, the more money we can make on the upside. That one's obvious. As you can see, the stock ran up into the 200 period moving average, which is the black sloping trend line running across the screen, found resistance, and pulled back. The question I would also ask is, did the stock find resistance at the 200 period moving average on the 60-minute chart alone, or was there another reason the stock found resistance? The most effective way to determine that is to go up a time frame. Let's go to a larger time frame. We'll go to the daily chart to get a better bird's eye view of what we're looking at and see if there was any real solid reason why the stock would find resistance on the way up at that level that happens to be just above the 200 period moving average on the 60-minute chart. And different traders may want to know this for different reasons. One trader may be long the stock and looking for an exit point, and they want to get the most out of it possible, but they also want to recognize where the stock might find significant resistance. Another trader may be looking to short a stock and looking to short a stock at a very solid resistance point and is waiting for the stock to rise to get that short off at the best possible time. So there's multiple reasons why we want a bird's eye view from a larger time frame of what we're looking at. Let's go to the daily chart. Just with the naked eye, I can already see one of the reasons why the stock may have found resistance at a certain level. And I look over to the left and I see that there was prior chart resistance right here. That's the chart's way, or the stock's way, of telling us that that price level is important. The stock hovered around this price level for 5 days, couldn't get through it, backed off, needed to build energy to get through that price level. That's the chart's way of telling us that that price level is important. So on the next visit in that price zone, we want to be aware that there's a high probability that that price level will once again become important. But there's also something else. Does that price level match up with a Fibonacci retracement level? let's go find out and put the retracements on the chart. I have my fib lines on the chart, and we're taking them from high to low. So let me just expand it a little bit so you can see it better. What you'll see here is the high comes in at 166.87 in this particular case. So that's our starting point, and we draw the fibs from high to low, and this is the recent pivot low from or after the high point, and that low comes in at $147.30, and now the stock is heading back higher. So we're retracing from low back to high. And what happened when we got up into that price area that coincides with that prior chart resistance? Well, it just so happens that it was a 618 retracement, which happens to be also known as the golden ratio. And you can go ahead and look that up on your own. But for our purposes here, what we want to know and what we want to recognize is that the 618 retracement is, generally speaking, your most prevalent Fibonacci retracement. Whether it's on the upside or the downside, your 618 retracement, more often than not, way more often than not, will actually produce a price reaction in the other direction, regardless of the time frame we're looking at. A 10-minute chart, an hourly chart, a 15-minute chart, a daily, weekly, monthly, it doesn't matter. So you always want to pay attention to the 618 retracements. Now I've taken the fib retracements off. I've put a line on the chart at that 618 retracement. I want to go back to the 60-minute chart where we started from and continue the conversation over there. Look at that direct hit. The stock ran right up into the 618 retracement, pierced through it by just a little bit, and immediately backed off. That's the market's way, or the stock's way, or the chart's way of letting us know that that price level is important. But wait, there's more. Remember the 14 candles from the consolidation pattern over here? Well, we have another 14 candle count. If you take the pivot high that pierced through the 618 retracement and you count 14 candles down, you come to this candle here. The following candle happened to be a tail candle. And where did that tail candle stop short? I'm curious to know if it stopped short or reversed at another Fibonacci retracement. Let's find out. Look at that. That tail candle pierced through just by a few pennies the 7.5 retrace, or 75% retracement, at just around $150. That's a nice big round number. Stocks like round numbers. Charts like round numbers. 150, 100, 125. Those are fantastic numbers. But where else did it find support? Well, look back to the left and you'll find out that this area here, right here, the stock tested that 150.47 level, give or take a couple of pennies on either side. 5 out of 6 candles tested that level before taking off to the upside. That's also telling you that that price level is important. So when you see a tail candle come into a important retracement level and it has prior chart support 14 candles down, you can see where you begin to identify multiple reasons why that price level is important and could produce a trade on the long side. And as you can see, once the stock pierced through that level at 150.47, within an hour, you were at 153.64, already back to the 50% retrace, up about $3 for any trader that was willing to take the trade at the 7.5 retrace based on that myriad of information we just discussed. I hope you're really starting to see how you look at the markets differently when you factor in all these different elements that we're bringing together. You can do this on chart after chart after chart, and once you get comfortable identifying all the reasons why a stock is poised to do a certain thing based on how it's trading and where it's trading, then you'll quickly gain a comfort level in taking trades based on the anticipation that a stock should do a certain thing because of the way they naturally trade. I want to continue on with our small basket of stocks, but I'll wrap up this lesson and we'll look at another stock in the next video. And that's in the interest of keeping these to a reasonable bite size for consumption.